There are many lenders in Canada you can choose from when deciding where to get your mortgage, and in today's video, we're going to go through each of the top lenders in order on what we believe the best lenders are based on the actual terms within the mortgage and some key features within them. Now, these lenders I'm going to go through will consist of the major banks, and it will also consist of monoline lenders, which are essentially lenders that specialize in mortgages, and if anything, they're actually slightly more picky with the clients they take on. Now, your bank or financial advisor may refer to these monoline lenders as B lenders. However, that simply is just not true. And what you need to understand is that the bank is looking to make as much money as possible, and the last thing they want is your business to go elsewhere. They'll try to do things like convince you it's best to have your mortgage and your banking all in one place, but at the end of the day, it doesn't really matter because it's simply just a payment that comes out of your account every single month. And now, your financial advisor, while they may be working in your best interests at heart, they just simply don't have the knowledge and experience with mortgages to be able to advise you on mortgages. I'm a firm believer that using an expert in a specific field you're getting advice for is your best option. And if you need a mortgage broker is going to be your best bet. It's similar to if you were to ask me where I put my investments or how I do my taxes. Now, running a business, I'm definitely pretty active with knowing how to reduce my taxes, and I'm also pretty savvy with investing too, but that's not something I'm going to advise you on. I would definitely just refer you out to an accountant or an investment advisor. So if you're looking for specific advice, get the specific advisor for that advice. And now, one last thing you need to understand about the monoline lenders is these lenders specialize in mortgages, and they wouldn't be around if they didn't have a better product. Think about it. How do you have a worse brand and a worse product but still get business? It just doesn't happen. So because their brand isn't as strong as the major banks, they have to have a better product to compensate for that. As a mortgage broker, I honestly love working with these monoline lenders because they really do have some of the best products in the entire business. Okay, enough of that. We're going to go through each of the best lenders, and we will include all 5 of the major banks. So we'll include your TD, Scotiabank, RBC, BMO, and CIBC, and list out a couple key different factors between each lender, along with some of our banks that specialize in mortgages. And before we get into that, please hit the subscribe button, like this video, and ring the bell to be notified. It does go a long way in getting these videos in front of people just like yourself, and it would mean a lot. Okay, let's dive into it. So let's start off with the first lender, and we'll start with RBC, and we'll progressively get better the further we get on in the video. So RBC has some of the most restrictive prepayment privileges amongst all the major banks, and they only allow you to put a maximum of 10% lump sum per year towards your mortgage, and you can only make this payment once. Now, most other lenders, they allow anywhere between 10 and 20%, and it doesn't just have to be once, you can make it multiple times throughout the year as long as it just doesn't exceed that total percentage. Well, in this case, not with RBC, they are a maximum of 10%, and you can only make it once a year, and that's it. RBC does also allow you to do a double up payment, which is nice, but it's nothing new in comparison to all the other lenders as they allow that as well. One of the worst things about RBC is their extremely high IRD penalty if you were to leave your mortgage early. I have another video on IRD penalties and how they're calculated, so be sure to check that out if you're interested in that. But this is the penalty you incur if you leave your fixed rate mortgage early. And it can be tens of thousands of dollars in some cases, and their calculation is one of the most aggressive amongst all the lenders you can choose from. If you choose a variable rate mortgage, that has a 3-month interest penalty just like every other bank. However, if you ever were to lock in that mortgage into a fixed rate mortgage, then it converts over to that IRD penalty. Now, RBC offers a true variable rate mortgage product, which means the payment always remains the same. And if rates go up, well, your payment doesn't go up, and if rates go down, your payment doesn't go down. Instead, of what happens is you start paying off your mortgage a little bit faster or slower, depending on where rates go. And this can be good for stability, but typically ends up costing you a lot more interest over the term because you're not staying on track with your mortgage and the principal pay down within it. Now, the last thing I want to mention about RBC, which is by far one of the biggest turnoffs, is they never offer you the best rate right out of the gate. And oftentimes they're actually trained to tell staff to tell you to go elsewhere and get offers from other lenders, other brokers, and then they will try to beat it. Not only is that ethically wrong in my opinion, because that means you're getting way too many people involved and they're doing all the heavy lifting and spending countless hours helping you, and then you turn around and go somewhere else. But it's a bit of a backstab as a client if you think about it, because they're never offering you the best thing out of the gate. So how can you ever trust that they have your best interest at heart? They're simply just trying to make the most amount of money off of you as possible. Okay, moving on to our next lender, which is CIBC. They have a 10 to 20% lump sum payments, and this depends on the product you choose, and their lump sum is also once per year. They have the 100% payment increase, also known as that double up payments, and their IRD penalty calculation is quite high, similar to RBC. They also have set payment variables, just like RBC does, but the one thing you really need to look out for with CIBC is accepting cash back with their mortgages. Oftentimes you might get a slightly higher rate, but then you have cash back, and the bank representative might argue that the cash back they're getting is more than the savings in a lower interest rate. But what they don't tell you is that if you break that mortgage early, which means you pay it out early, even a day early, you have to give the entire cashback amount back plus that penalty calculation. So this tricks a lot of people. Even if you pay it out a day early or you renew a day early, you could be getting $3,000 cash back on your mortgage when you first get it, and then you're giving that entire amount back on top of your penalty that you pay for breaking your mortgage early. So this is really just a sneaky way they can handcuff you to staying with them and not being allowed to do your due diligence, because you really don't have much time to go elsewhere. So moving on to the next one, we got BMO, and they have the same thing, 10 to 20% lump sum privileges, depending on which product you choose. Now you can make this lump sum anytime, as many times you want, unlike the previous two lenders where it had to be on one day. But be careful, because the products they offer that have the better rates have what's called a bona fide sales clause in them, which essentially means you are not allowed to refinance the mortgage unless you were to sell the house. So the only way you can pay out the mortgage early is selling the house. And this is a major handcuff in the sense that you are basically stuck with BMO unless you decide to sell your home. Now going back to the prepayment privileges, instead of having that 100% payment increase or being allowed to double up your payments, you're only allowed 10 to 20%. And so basically, if it wasn't for being able to make that lump sum anytime whenever you want, BMO would have the worst prepayment privileges out of all the lenders. Now their IRD penalty is practically the same as the previous two lenders. It's very high, and they also have a true variable rate mortgage, which means the payment is static and doesn't change, but you could potentially be paying off your loan much slower. Now next up we got TD, which is in the broker channel, which means as a mortgage broker we have access to them. They have some amazing prepayment options, and they allow 15% per year for everyone. They don't treat you different if you're richer or if you have a tiny mortgage. Everyone is treated the same, and it's 15% per year anytime you want, as many times as you want. You just can't exceed that 15%. And you're also allowed to increase your payment up to 100%, which is the double up, and their IRD calculation is the same as most of the other banks, and they also have a true variable rate mortgage with a set payment. However, the one thing you need to be very careful about with TD variable rate mortgages is their variable rate is based off TD prime rate, not the Bank of Canada prime rate like other lenders. So there was a situation where the Bank of Canada lowered interest rates 0.25%, and TD decided to only lower their prime rate by 0.1%. So essentially this means that if the Bank of Canada, which controls variable rate mortgages, decided to lower their rates, TD necessarily isn't obligated to do the same. So you could have a variable rate with TD versus someone else has a variable rate with another bank, and they say interest rates are going down, while your rate might not go down as much as the other person's. Now it's very likely that they still will be tied together, and if one goes down a certain amount, the other will too, but there's no guarantee, and that's the one thing that you need to watch out for when you're going with TD. Okay, so moving on to our absolute favorite major bank, and this is Scotiabank. And now they have by far the best product out of all the lenders, and here's why. They got a 10 to 20% lump sum payment anytime you want, just like TD does. And also on top of that, you can increase your payment 10 to 20%. Now on top of that, you could also do the double up payment. So you can actually stack all three of these together, and you can pay your mortgage down the fastest with Scotiabank opposed to any other lender. Now another reason why their product is so good is because they have a home equity line of credit built into their mortgage. Now basically what that means is as you start paying down your mortgage, those funds become available to use as a line of credit. So say you have a $500,000 mortgage and you pay it down to $475,000, well, now you have $25,000 available to use on a rainy day / emergency fund, whatever you need it for. The best part is this limit keeps going up as you pay your mortgage down. Not only that, but they're also the only major bank that offers an adjustable rate mortgage, which is another kind of variable rate mortgage we like a lot more because it ensures that you're always on track with paying down your mortgage. if rates go up, your payment goes up to match it. And if rates go down, same thing, your payment goes down to match that. And what this does is it ensures that you're always paying your mortgage off on time. Now, the reason why we like this so much is because in the event that interest rates increase, this allows you to gradually experience the rate increases instead of being hit with it all at once on renewal. Right now, there are so many people in variable rate mortgages with set payments with other big banks, and they're only paying their interest. They're not paying their mortgage down whatsoever. Because of that, when they come up for renewal, their payment is gonna jump significantly. Although those with an adjustable rate mortgage who have been paying it down at the same rate the entire time, whereas all the people with adjustable rate mortgages, they've been actually experiencing that payment increase over time, so they're not gonna get hit with any payment shock at renewal. Okay, so now moving on to the lenders we love so much, and it's the lenders that specialize in mortgages. Now, if you haven't noticed, I did put a B next to the lenders that brokers have access to, and I didn't rank them where they are to be biased because I have access to them. In a way, it makes a whole lot of sense, and it's no coincidence, and I'll explain that right now. So as a broker, I am offering third-party advice. I do not work for any banks. Therefore, if I was a lender and I didn't have the best product and terms within my mortgage, would I want someone outside of my company advising my clients? Probably not. I think the fact that TD and Scotiabank and these other lenders that have a broker channel and allow people to go and get their own advice, their third-party advice, it's very important, and it speaks volumes to the products they have to offer, because at the end of the day, they have nothing to hide and they want their clients to get the best advice and get placed in the best products possible. Now, I just wanted to quickly mention that before moving on to these next lenders. And the next lender I'm going to mention is MCAP. And we love working with these lenders that specialize in mortgages because their terms are a lot more flexible. The prepayment privilege with MCAP is 20% lump sum per year, anytime you want, which is quite high in comparison to the other lenders. However, their increased payment privilege, where you can increase the payment amount, is on the lower end. It is only about 20%, and they do not offer the double up payments. However, the most important feature with these lenders that specialize in mortgages is that they have a much lower prepayment penalty calculation. I'm talking significantly lower than ones you would find at the major banks, like sometimes 2 to 3 times lower, which in the grand scheme of things could save you more than tens of thousands of dollars, and essentially more than you've even paid towards your mortgage over the course of your term. Now, I have another video showing the differences and how that's all calculated and a comparison between the two, but this is one thing you really need to consider. Now, this is a fact that 60% of people pay their mortgage off early and incur a penalty in the first 3 years. And there are many situations where you might need to, such as moving, or you're maybe getting separated with a partner, your job relocates, you can't afford the home anymore, you want to refinance to get a better rate in payment, or maybe you just simply want to tap into some equity to do some renovation. The list goes on. Now, I always tell clients penalty, product, payment, in that order. They should pick their mortgage based on the penalty first, then the product, then the payment. The penalty calculation is incredibly important, then the product, and then the payment. And oftentimes these monoline lenders that specialize in mortgages actually have better rates in some cases as well. But I could definitely make the argument that if given the choice, a monoline lender with a slightly higher rate and payment is actually still much better than a major bank with a slightly lower rate, solely due to this prepayment calculation. And nobody ever thinks they're gonna break their mortgage early until they do. But why restrict yourself like that? Life is short and stuff happens, changes happen. You might want to make a change, but you just can't because now you have that payment. So don't put yourself into something with a massive penalty. It's simply not worth it. Now, last is our absolute favorite lender, and this is First National. Essentially, all the same terms as MCAP, but they also allow the double up payments. And their penalty calculation is very low compared to the major banks as well. Now, on top of that, both MCAP and First National also have adjustable rate mortgages, which is a great product, like I mentioned earlier when I was talking about Scotiabank. So now that we have gone through the best banks and where to get your mortgage from, if you are in the market for a mortgage, either for a new purchase, maybe you need to renew your mortgage, or maybe you're in a mortgage that you really don't want to be in anymore and you want to transfer it to a new bank, don't be afraid to give us a shout. There will be a link in the description to fill out a form and book a call. And I also want to quickly point out that we will never choose your product for you. Just because these are the top 3 that we are mentioning, that doesn't mean that that's who we'll shove you into. We essentially will review your situation, see who you qualify with, and then present all your options in front of you, and then that way you can make the best decision. We are simply here to guide you and help you make an educated decision, and my team and I have crafted a meticulous process to make it the most stress-free mortgage experience possible. We would love for the opportunity to help you, and if you're interested, the link will be in the description, or visit us at whiteridge.ca. And once again, if you've gained some value from this video, it'd mean a lot if you hit that subscribe button, like the video, and ring the bell to be notified. It does go a long way in helping us grow this channel. We're trying to provide as much value as possible. Thanks a lot, guys. Catch you on the next one.